Hey traders, it's Steve from the Stock Index Trading Room. I hope this finds you happy, healthy, and reasonably prosperous in these historic market moves that we've had the opportunity to take advantage of. In our in this weekly video, I'm going to teach you how we approach basically support and resistance, real true support and resistance in the markets. And what makes the market move? Why does it move? Who moves it? And is that reliable? Is that something that you can base a successful trading future on? I'm going to share that with you briefly. I have subtitled this A Scientific Approach to Successful Trading. Let's make it legal. Please read this, pause it, come back. Okay, in the diffusion of innovations theory, and um, this was developed by Everett Rogers based on Google AI Overview. It classifies consumers, and that's what we are. We buy and sell in the market every day. There are five categories based on their willingness to adopt to new market moves. Okay. The markets are made of people. So this theory guides what traders do at different stages. And we're going to show you what that looks like on our chart. Innovators, the smallest percentage of population, 2.5%. They're the earliest movers in any new market direction. Their win percentage is not impressively high, but their profit is the largest of any of these groups, and we'll tell you how that's possible. They build positions in market resets, and then they add to winning positions and support their position as the market starts to move in their favor. We'll talk about why that is, and that's the important aspect of what I'm going to share with you today. Okay, early adapters, 13%, 13.5%. That's where we like to trade. Okay, we'll show you what that looks like on the chart. This is the earliest entry with high reliability. This increases our reward to risk over time scientifically that are available to any trader. Early majority, 34% of the population, these traders reluctantly adopt to the possibility of continuation. Now, we love these people, right? Because they're supporting our interests. They're adding to the move, and that supports our position. Late majority, same thing. This group is the most skeptical in nature, and they're guided by the what if method of market entries. This group tends to have a lot of success, but they tend to give all that back. And then the laggards are 16. We love this group. If we're in a move long enough, they're supporting it. We love this group because they provide the liquidity for the people that need to get out, right? In case of a case in point, if we're long, okay, and we need to sell it to go flat, we need people buying it late in order for us to be successful. Okay. There is a distinct point where any new market move turns from a maybe to almost certain market move. And we're going to show you what that looks like on our charts. This point's often referred to as the tipping point. Tipping point is defined as the point at which a series of small changes or incidences become significant enough, two cards larger, more sustained action. Well, that's what we want. We want to actually be in the market before the tipping point happens. And we'll just, again, show you what it looks like on our chart. In trading, our idea that we want to capture is always a sustained directional movement. Okay. So let's take a look at our chart and see what that looks like. Okay. Five stages of public participation in trading. We have innovators, early adapters, early majority, late majority, and laggards. Okay. This is from Friday, March the 13th. Um, we're going to spend most of the time on this idea, but so you'll know, Rob Mitchell, Robin's World Cup trading champion, designed everything and is still tinkering after 30 plus years. Super smart Rincos are 8 points in a reversal, 4 points in a continuation. One of the things you'll notice is that these are sort of reading, more than sort of, these are reading order flow. When you get a green bar on a green background, it tends to go up a little or a lot. So a big advantage for our members just in the way the bar is constructed. And then we put it with known repeatable market structure reads, and there you have it. So here's what happens. Innovators, small percentage, they really don't know where the market's going. They may have a model saying up. They may have a lot of traders in here, thinking, hey, it can't keep going. We're going down. And so we get this area. It's an encompassed market structure pattern. We have this new high that gets tested and we go down. We have this new low that gets tested and it goes up, right? So there's uncertainty in here. But the innovators buy, sell, buy, sell, buy, sell, building a position, right? So what happens when it breaks to the upside? Well, the buyers are going to do what? They're going to pile it on. All right. The people that are waiting or that are going to do what? They're going to trade maybe this in and out. We call this our annuity signal in the room. They're going to get involved here. Late majority are getting involved here. And laggards are going to provide the liquidity for all these people, most of these people needing to get out. Okay. So innovators are building the position. We break out. Early adapters are getting in here. You will have to withstand a bit more of resetting um, as the market proves we're going up. We test this. We test this. We break out, right? Or you could do it here at the breakout point. This is where a lot of our members really enjoy these moves, and they choose to be more of an early majority rather than early adapter. Okay, obviously substantial larger moves here, but a little more heat. And this is pretty typical. This was Friday at we like to wait 10 minutes for the market to open, and we had some brilliant entries. Okay, so innovators buy, sell, early adapters, early majority supports all of this. Late majority supports typically the last move, and laggards tend to put in the tops. Okay, they tend to be buying super late, and they also provide the base for the next innovator congestion, encompass congestion, next major market move. So we have green bar here that doesn't get tested. Green bar doesn't, green bar doesn't, green bar doesn't, green bar gets tested in what most people would call a double bottom here, right? And we have red bar doesn't get tested, red bar doesn't get tested, red bar doesn't get tested, red bar gets tested, right? So I can't teach you to do this here. That's all I'm going to talk about that. But this is how this scientifically proven pattern came to be, is we have what we call a double pivot retag. Now this breaks out this way and this turns red. So what does that mean? Where are we headed? Y'all know that by now, right? We're headed this way, this way, this way. Okay. So this bar doesn't get tested. This bar doesn't. This bar does. This bar does. We break out up. We come all the way back into the box. That's no fun. And this is innovators, early adapters, middle and late in an abbreviated move. Now, unless you really understand market structure, you can't tell that's an abbreviated move, but we all talk about it in the room. Now, we've had huge moves, huge ranges as we record over here. And so the market gets a little sideways. We don't have anything in here, okay? In these 4 or 5 minutes, we don't have entries. Um, but we do have something here I want to share with you. We'll teach you this in the room. We call this a megaphone, and the industry calls it a megaphone. We define it in a certain scientific professional way, and it just tells us it's a broadening formation. They're traders are willing to take positions, higher highs and lower lows are both being traded. And so that's going to be a major squeeze on somebody. Okay. And we'll teach you again, teach you how to look for super moves coming. I think we had three of these situations and they all led to pretty incredible things. So here we have a long move and we retag and we retag and we break out down. That's going down. That's going down. We would consider that from this megaphone, we would consider those 35 or 40 handles a big move. We would consider that a big move. We broke out down. This is pretty awkward and clumsy in here. We have our key to success right there. So we get another one, and I've just got these drawn out. I'm not going to go through all these in detail. We break out down. We have a rocket out of the box. You'll hear that a lot. We have an in and out. You'll hear that a lot. Just confirmed at a super high probability. Here's another one. Oh, I can't trade it up. Too much selling pressure. Large box, large move. 10, 12 handles there. Here's a tighter box, breakout, rocket out of the box, uh, in and out, boom, in and out, boom. Again, this stuff just repeats, y'all, over and over and over and over. And that may be up. No, that's not it. Yeah, we've got this edge, this edge. They both get tested. We break out down. We head down. We head down. Now here we get one. This would be people, we mark this in the room. People go, well, I don't think I can do that. And I understand. You don't have to trade just because this is probably 90% headed up. You take a break. I don't know how many of these. I think we had like 14 or 15 of these on Friday. Um, that's enough. We've made our point. That's enough. If that's appealing to you, we mark this on a regular basis and teach you how to do it when we're not in a room. So come and take advantage of this. The 5 stages of public participation. Um, Send emails to Second Exchange with Gmail if you want to come join us and start trading this on Monday. Come to our website. There's a nice coupon, nice discount coupon there for that. And on behalf of Rob Mitchell, master trader, and the rapidly growing number of traders that are taking advantage of the markets that we're trading in, uh, we wish you the very best, happy trading, and choose to believe.